Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to The Week That Was, the weekly podcast that sums up market movements and events from the past week and their implications on asset markets. I'm Michelle Castellino, your host for this week's episode. Markets ended the week on a weaker note, with the Nifty down about 0.7% and the Sensex losing around 0.9%. This was amid continued uncertainty around the US-Iran tensions, a record weak rupee, rising bond yields and sustained FII outflows. Broader markets saw sharper cuts, with mid-caps declining about 1.3% and small caps falling nearly 4.7%, which reflected a clear risk-off sentiment. On the sectoral front, telecom led gains and was up around 4.8%, supported by strong earnings, while metals also performed well, rising about 2.8% on strong global commodity prices. On the downside, realty saw a sharp correction of nearly 5.8%, followed by auto stocks down around 4.2%, driven by macro concerns and rising crude prices. IT also declined about 3.2% on continued worries around AI-related disruptions. From a commodities perspective, gold surged nearly 4.9% in rupee terms, driven by recently imposed higher import duties and safe haven demand globally. Oil prices also jumped about 5.8% during the week, taking the year-to-date rise to around 81%, with prices now near the 110 mark. In fixed income, bond yields moved higher across the curve, with the 10-year G-Sec yield rising about 10 basis points to 7.13%. Meanwhile, the rupee weakened further, slipping past the 96 level, reflecting a combination of global pressures and domestic macro challenges. On the macro front, inflation, unemployment, and trade deficit data came in last week. Inflation remains benign in the near term, with April CPI around 3.5%, supported by steady core inflation and limited pass-through so far. However, upstream pricing pressures are picking up strongly, as reflected by the strong surge in WPI, which increased to 8.3% in April versus around 3.8% in March. This, coupled with El Nino-led food price inflation, poses an upside risk to CPI, as these costs are gradually passed on to consumers. Food inflation is already trending higher at 4.2%, led by meat, fish, oils, fruits and eggs. Bloomberg estimates now suggest FY27 inflation is expected to inch closer to 5%. The trade deficit in April widened sharply to about $28.4 billion, up from around $20.7 billion in March. Now, exports did hold up reasonably well. They rose to about $44 billion, supported largely by petroleum products and electronics. But the real story is on the import side. Imports jumped to roughly $72 billion, driven by higher crude oil costs, along with strong demand for gold, which came in at about $5.6 billion, and electronics at nearly $12.8 billion. Oil remains the key pressure point here. Even though volumes were somewhat lower, elevated crude prices pushed the oil import bill to around $18.6 billion, keeping the deficit under strain. On the positive side, the services surplus continued to be strong at around $20.6 billion, which does provide some cushion to the overall external balance. However, looking ahead, pressures are likely to persist. The CAD is expected to widen to around 1.8% of GDP as per consensus estimates. So overall, while services remain supportive, the combination of elevated oil prices and strong import demand is clearly driving a weaker external position. Lastly, on the labour front, India's job market remains broadly stable, with the unemployment rate at around 5.2% in April. While urban unemployment eased slightly, the overall uptick was driven by rising rural joblessness, alongside a mild decline in the labour force participation and work population ratios, pointing to some softening in the employment conditions. That's all for this week's edition of The Week That Was. If you found this useful, don't forget to like and subscribe. Thanks for tuning in and have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.